Kowalczyk is Chief Investment Strategist at SJS Markets, and he is joining us now live from Hong Kong. And of course, still with us is Arjuna Mahendran, the Head of Investment Strategy for Asia at HSBC Private Bank. Welcome to both of you. Thanks for coming in here so early on a Monday morning. Arjuna, why don't we start with you? Is this what the economic recovery looks like? The payrolls data on Friday, unemployment at a 26-year high. Is this what we have to look forward to?
Well, it's a bit curious, I admit, but I think it all fits together in the sense that this phenomenon of jobless growth seems to be upon us. And when you look at corporate earnings growth in the second quarter, we're still awaiting the third quarter numbers, which will start next week. But what we found was basically profits were growing because firms were cutting costs, which basically means laying off people, unfortunately. And as a consequence, their profits were increasing because output was still fairly strong. Now, why was output strong? I guess people who are still in employment, fortunate enough to have their job, actually have more money to spend because prices have not been rising as fast. In fact, prices in lots of retail stores have been falling as companies cut the prices of their products, hoping they'll move out of the store. Fuel prices have been coming down. So real purchasing power has been improving for consumers who still have some money left or have their job. And therefore, I think you see that consumer spending hasn't been all that soft as much as we'd expect, despite the rising unemployment. And companies are trimming their workforces, so their profits are actually growing. This is what's the conundrum. So stock markets have been applauding all this, rising because of rising profits. And now, of course, we have a bit of uncertainty whether this is sustainable. So we have to really digest these earnings that are coming out in the next few weeks and see whether this is really going on.
It really is a conundrum. Darius, jump in here. What's your take on all of this? And how do you explain the fact that while bond markets have been rising in this environment, bond yields have, investors have also been putting money into the bond market and sending yields lower?
A lot of asset classes that normally diverge have been moving upwards over the past few months as a result of huge liquidity that global central banks have pumped into the financial system. So in many places, prices are much higher than fundamentals would be able to explain simply because of policymaking decisions. And as long as the Fed continues to expand its balance sheet, as long as other central banks continue to promote their liquidity programs, this is likely to continue. So we may see further gains in equities and commodities, and at the same time, some more decline in government bond yields.
Okay, Darius, thank you so much. We're going to get back to both Darius Kowalczyk and Arjuna Mahendran, who are both joining us this morning, and we'll get their take on what you should do as an investor and how you should be managing your portfolio in this type of environment. So that's coming up in just a couple of minutes. In about 20 minutes from now, New Zealand's economy has just emerged from its longest recession. Kowalczyk, who is the Chief Investment Strategist at SJS Markets, joining us from Hong Kong, and Arjuna Mahendran, our guest host this morning. And Arjuna is, of course, the Head of Investment for Asia at HSBC, and he is joining us now live on the set. Okay, Darius, I want to talk to you about this G7 communique we were talking about before the break. They talk about volatility in the currency markets, how that is certainly not a good thing for the global economic recovery, but they didn't even mention the U.S. dollar. Talk about a glaring omission.
I think that there simply was not enough agreement within G7 to single out any currency from the circle, so they basically focus on the Chinese renminbi. But apparently the US didn't want to criticize the weakness of its own unit because it's going to help the American economy to emerge out of recession at the expense of other countries. And without unanimity, they cannot criticize the dollar's weakness. And this opens the door for the market to try to push the dollar even lower. So I think that October is going to be a bad month for the greenback.
Absolutely. And Arjuna, do you think this opens the door for more market weakness? And when we were in the break, you said the G7 is basically on its deathbed. Should the other countries have stepped in here and said, wait a second, your currency, United States of America, is down 15% over the past few months. Something needs to be done.
Well, I mean, basically, in the background, what's going on is this big shift of production away from the G7 into the G20. The Asian countries and all the emerging market countries like Brazil and Russia are taking over the economic center of gravity, if you like. And that's why I said the G7 really doesn't have much of a lifespan left. I predict in the next 2 or 3 years, the G7 will cease to exist as a group. It just doesn't serve any purpose meeting anymore. And the G20 leaders actually decided that they would really be running global economic policy henceforth. So that, I think, is really going to change the terms of the debate. As you say, the G7 took a last sort of shot at the Chinese renminbi. But that's probably all they can do right now. There's this beggar thy neighbor type of policy going on amongst the G7 countries, which is each of them is trying to devalue more than the other. And you know, we don't really, this is what is causing the currency volatility. So I think it's a bit rich for the G7 to say that they decry the volatility, when in fact each of them individually is doing everything to create that volatility.
Like Japan's finance minister said, he'll intervene, or the central bank will intervene if necessary. Darius, come on in here.
Yeah, it's very interesting to mention what Japan was saying, because it seems that the country is increasingly unhappy with the strength of its currency. But unfortunately, since there was so much commotion regarding what Fujii actually wants to happen, I think that the market will test his claim to the possibility of intervention. So I think that this week we are going to see a stronger yen, and over the course of December testing at least 87 to see whether Japan will indeed make good on its threat.
So Fujii, he's a new finance minister, so he's still finding his way, presumably, and I don't think the market is taking him on every word that he says. But do you think we're going to start seeing competitive devaluations emerge in other G7 or G20 countries as everyone tries to compete for those exports?
Probably not within G7, because all those major economies are trying to move together to combat the crisis. And if they start to do things unilaterally, then the world could go into chaos. So I do not expect that. Some smaller countries may continue to intervene, such as Switzerland. Here in Asia, I think Korea may be tempted to prevent any further appreciation of the yuan, but none of the G7 members is likely to go into the market unless their currency moves very precipitously. So, for example, if the yen goes to 85 quickly, then there might be some move from Japan.
Darius, unfortunately, we're out of time and we have to say goodbye to you, but thank you so much for your time and for your insight this morning. We appreciate it.
Thanks for having me.
That was Darius Kowalczyk, Chief Investment Strategist at SGS Markets, and we'll be getting back to Arjuna in just a couple of minutes for more on investment strategy. Going for a quick break.